Hi, this is Elliot Wavesage. Want to do a quick market update. Like always, none of this is financial advice. Always do what's best for you. So today the bears asserted control of the market. I think it's pretty clear now where the right side of the trade has been and needs to continue to be. Uh, there was so many indicators that gave us these clues, but I won't go through them. All we'll talk about is where we're going to go from here. Okay, so the Dow Jones, again, 3 waves, 5 waves, I could care less. We got the breakdown. So one way to kind of look at where things are right now, you have a connector wave here with a lower low. Uh, as long as we're below this downtrend line, and I'll just kind of draw it here roughly, the bears are in control. All rallies should be could be short opportunities. Any pumps, any crazy things like we had today in the last few days, those are just opportunities to short until we can break that downtrend line. What would be really vicious though is a flat here and an A, B, and then C, and we come all the way back up to 34,000. But I would definitely go back and put in more on the short side there if that happened. But right now, it's really just about kind of sitting tight, letting this play out more. So here's our area where you could see another bounce. It could become a 1, 2, 3, 4, 5, and then retrace and down. So this is something we'll keep an eye on. I do think this low will break, really confirming this direction. So that's kind of what I'm seeing in the Dow right now. From stochastics, you do have some divergence here on the 15-minute here, but as you can see, you clearly corrected the cycle, the 45-minute. Same thing, you corrected the cycle, but we're going to need to, and we will erase that divergence. And once that happens, then you got this wave 3, and it's just kind of use your imagination how far down we go. Now the 45-minute cycle should be coming to an end soon, and then the 4-hour cycle really here is just kind of getting started. But as you can see, the first sequence lower is about to end, so we could see, like a little more downside, and then the 4-hour and the 45-minute could pull the market back up in another rally just to trap more people. And then when this stochastic resets a little bit more and the 45, then we could see the waterfall sell off. That's kind of what I'm thinking right now. But that's just my speculation. It could just crash tomorrow. The daily looks really bad. The daily, this will need to come all the way down. This will come all the way down. So as you can see, we are in a downtrend. The 4-hour should be pulling it lower. The 45-minute should erase divergence. So we should get we should sell off, and then we should bounce in some way, and that bounce will fail epically. That could be your last opportunity to probably get out of the market on the long side that you may have on that, whatever relief rally. Now, if we don't get it, there is always a guarantee we could just gap down and run, and that's the end of it. Because we are in a 1-2, 1-2, and we are unraveling to the downside. The SPY, we had this area of resistance support. It flipped to be resistance today, and they just tried to pump it. I mean, so many attempts to get through that resistance, just couldn't do it. So now it's going lower, and that's the capitulation. And this could really unwind. We could see it come all the way to 423. I think this low will break at 420, and then again you'll have a 1-2. You have another 3. You may get a bounce again, and again the short-term stochastics 45 reset. We'll look for a bounce in the 4-hour soon. So what I'm trying to say is I'd be surprised if the market just totally tanks and crashes tomorrow. What I would expect is some kind of sell-off early and then a relief rally pretty much for the rest of the day until close, counter trends, and maybe even into the following Monday to reset that 4-hour, and then really you're set up Tuesday and Wednesday for an epic meltdown. Stochastically, just if everything works predictable as what I'm seeing play out here. The triple Qs, gave it up to, and again, this support flipped the resistance. This is, if I was day trading, this is what would give me the confidence to stay short is I want to, I would be like, well, let's make the market prove to me that they can flip this back to support, and it just never was able to do it. So there was really no reason to panic out of your shorts here until the market flipped this back to support, and then that would be cause for concern. But we never really had that. We got up really high, but we didn't get that closing candle. That's why it's important to give it time to play out, and we did, and now it's down we go. And I do believe technology is set up actually to probably rally with earnings next week, but that would be again just an opportunity to fade and short into something more dire. We could get a Tesla, of course, on these Magnificent Seven earnings next week. But the way the stochastics seem to be lining up to me is we're probably going to go into earnings somewhere down in this vicinity where I have circled, which should actually could support the market for a counter trend rally. So be careful shorting in the hole. But it does. But I will say that if the individual stocks on the Magnificent Seven show good setups, even if we're down here, let's say there's still some reason support it, and then I would think of a bigger sell-off, and then perhaps you could gap down on earnings and finish this massive top-in pattern and just crash. So I guess what I'm trying to say is you gotta watch earnings. I don't think it's I think it's case by case, but we really need to see going into that days of where we are. But looking at it, I wouldn't be surprised to see it come down. You go in the earnings, you come out, some kind of relief rally, and then, like I said, then you give it up, and it's all done. But as you can see, the bears are in control, and I do expect some more downside tomorrow. And you got this top pattern. It should finish. We should break this low. We've had the lower low sequence 1 2 1 2. It's almost a similar fractal that we had here, right? A lower low, a 1 2 1 2, and you can see the outcome. I expect the same outcome on the higher time frame playing out, and ultimately this is the daily target for a much bigger bounce somewhere in this area. And there is and when we do bounce here, I do expect that bounce to fail, but this will be a multi-month bounce. That may be a little bit of a New Year relief rally, and then early 24s, you get the real vicious sell-off. It would be surprising and shocking to me that if we just crashed, to be honest, given how long we stayed up in here, because we did burn a lot of the stochastics to the downside playing around with this chop. So a lot of firepower was wasted really on both sides of the market. Although the bears are winning, it will take a substantial effort in climax to just drop this down and crash it without a bounce around here. So it's not probable. So when we are trading here, I will be looking for long swing positions on the long side. I won't be playing for a straight down crash. As we would know, I think the VIX will be where we want it to be here too. So this is kind of the area where it's time to do some shopping. Not here, it's too risky, but it's like I said, you could see this drop and then a rally out of earnings, and then the fall, the real drop down into here. That's the most typical pattern. But as you can see, that's only because of the 4 hours and the 45. Now the daily cycle obviously still got a long way to go to bring that down. And we even have the weekly cycle broke down. We've seen this needs to come all the way down. So that's why it could still bounce here and fail and go lower over many months. And then, like I said, unfortunately, that will probably break the monthly cycle, especially if we break that 42 level, and that would also break this level, and that should bring the market all the way down to some really unbelievable lows. But I think this is we got to take it one step at a time. Like I said, it's pretty clear the bears are in control now. I think if that's not the strategy, I think you really want to look at is finding opportunities to short and not really buy the dip. If you're following a lot of buy the dip traders, they're still trading like we're back in May and June. That trade is over. If you follow me, we left the market already and flipped to the short side and been playing that throughout this whole time frame. So I think that's why the conditions changed. We never let, if you follow Elliott Wave Sage, we never let the most recent price action, influence our trade-in bias. This price action really has flipped too many people to think we're back in a secular bull market when we really aren't. We had this unorthodox bottom that showed no capitulation. We never made a new high. This is just a massive connector wave that has now ended. And until the bulls can retake these prior peaks in July, the bears are in control on the weekly time frame, monthly time frame, daily time frame, and 4-hour and 45-minute right now. And in soon, the 45 and 4 hours should be changing back to a bullish favor. So just be careful day trading. Just keep an eye on that unless we get a massive push down in the market to bottom those indicators out before they can bounce in the next day or two. We should know tomorrow if that's going to happen. IWM just really sucks. I was worried this could be a 4-wave because we had this consolidation, but we didn't get it, so there's no 4-wave. It could be a 1-2-1-2. I'll just label it as this, given the RSI reset there. So we'll call it a running flat for now. This could be still a 1, 2, 3, 4, and it could be a 5 here, but if it's a 5, it still needs 4s and 5s, so it's still just going to grind lower. And like I said, I do expect this October low to be taken out, the first indice to take it out. I've been saying that. Typically when the market takes out a low like that, this is still considered massive support because you had major lows. So even if we were to take it out, I would expect a ricochet up off of that low, but that would be another opportunity to short. What I think could be possible is you break this low, we break this low, and then you get a massive ricochet up, and then we come all the way back up in that ricochet to back test the bear flag breakdown, and then you get the massive waterfall sell-off. I need to get rid of this box. So I think trading the Russell is very tricky, but obviously if we break the October low, you really have no business buying it unless you're trying to trade for that ricochet rebound bounce, which can happen. But there will be a back test. I think it could back test the flag because we've sold off such a long time without a significant rally. But it could also just back test the prior lows here and be more shallow. But that would be a good short entry on that back test if we can get it. But right now it's really tricky to kind of take a look. But it does look like a 1-2-1-2 setup. We'll see what 3 and 3 happens. And if it turns into a 5, it will just break through and then ricochet up. So if it's a 1, 2, 3, 4, 5, we'll get the ricochet crash. If it's a 1, 2, 1, 2, it won't happen. It'll just be a massive meltdown, and it'll be waterfall selling all the way to Russell 119, IWM 119. Futures are red. I'm not surprised to see that after today. Bitcoin, again, I'm not trying to predict Bitcoin, but I don't like trading it given his historical nature of on massive capitulation sell-offs, which we're about to potentially go through. These usually sell off. This would be a better area to buy it for me. So I'm sidelines on Bitcoin. Natural gas, I warned everyone about this area of natural gas. Here I said, we did come into a buy area, and I said warned about, it's Boyle. Came into a buy area. I warned for this bounce, and we got it, and now we failed. So the better setup was to wait for that bounce and failure, and now we have an area where we could be a really good opportunity at 56 to 50. So I will be picking up a pretty good chunk of this in this area is my next trade opportunity if you're bullish here. And then I would put stop losses at 45. And then we're trying to play for that wave 3 price action, the parabolic price action in wave 3. Oil's just continuing to grind higher. If we do take out this high, I would say go fill up your gas tank because oil could go much higher. We're talking 130, 140 oil easily. If this high's taken out, it sets up a new sequence. Gold is in a sell area. Now, I don't like trading gold because in liquidation sell-offs, historically gold always crashes. It never rallies because people have to sell it, but then it ends up being a great pickup opportunity. So the way I'm going to play gold is not the FOMO into it. I'm waiting for the meltdown, the capitulation sell, and I'm going to try to anticipate that move, and then I will buy the dip on that. and catch that falling knife and pick it up at a lower risk, higher reward entry. This is a high risk entry here, although it can still push to new all-time highs. It's just a tough trade. You have to have the conviction to hold it. I don't have that conviction, so I won't buy it. I won't mess with it. Do what's best for you. But if it does run, then this two wave is set, and gold's going into a 3 of 3 on a breakout that has gone back for maybe like at least a decade or more. So it is going to go higher than 22. I mean, it's going to pretty much moon if we can get a 3 of 3 breakout of this consolidation. So it's a very significant thing to keep an eye on. So just watch gold. But I think for right now, I'm not a fan because typically it's the past. Even while it's bullish, running into a correction or in the first wave down, like it's been the liquidation, the C leg down, gold always gets hit. So I'm not gonna FOMO into it, and neither will I do it with silver. And actually, silver looks like got rejected here. So this did hit the sell area and did get rejected. So this is actually a warning sign to the precious metal market that perhaps it's not time to be as bullish as you think if silver cannot come back out and take this high out. We'll see if we get that. If we can, it'll be very interesting. Dollar index, big picture, is just back testing a downtrend line, and I believe we got a move higher, and this is just kind of consolidation in a wave two, and that'll push the market lower. I'm not looking for a meltdown in the dollar. And then the bonds were the story, but if you followed me, you're not surprised what happened with bonds. I said be careful with the 10-year. So the 10-year you got to be really careful with. We had this resistance. This is historical horizontal resistance that got obviously rejected. Now we overtook it. It should be support. It's going to be tested as support eventually. It may do that in the next trading days. That may be why the 45 and 4 hour cycles get bullish energy and can get a bounce. If this could come back, it's probably gonna come back and want to retest this. This looks like a 5-wave move up of some kind with massive divergence. So I do see that, and that could actually support the market higher. But I believe this back test will hold, and then we'll ricochet off of that to 515 and probably come through it and wick through, kind of like we did here, and then have a much bigger pullback, and we'll reassess the chart. And so it seems like the higher rates go now, the market's under pressure. The lower they go, the market is not right now. Now that could always change, but that's what I'm seeing. So if that's the case, keep an eye on the 10-year. We could see a pullback and a back test of 4821, but I believe that will hold and take us up to this 52525 area, and then we should get a pretty large correction from there, and we'll see what happens. And then the 20-year did hit an extension area for wave 5, but I don't see a wave 4 yet. So this could pull back, but it should make another high. The 30-year should be finishing this wave 5 at any moment. And we do have extension in this 5, so that would finish this wave 3. But as you can see, we still have to grind higher. We're not done yet. We're not done yet, even though people want it to be done. So this is a warning, and as you can see, there's a lot of 3s and 4s and 5s, so we can just keep extending. And if the momentum erases divergence, it just becomes another 1-2, but for now I'll label it like this. And again, if we pull back in 4, we could see the market support it. What happened from October 6th to October 12th? Well, let's take a look at the triple Qs. What happened during October 6th to October 12th? Here you had 6, 12, basically V'd up. So if you're short, be careful with that. That's why I said I think we could pull back and then have this counter trend either into tech earnings or post-tech earnings. But that, again, is just another opportunity to short. And the time that short, I would be looking for the rates to be, I would be looking for the 10-year to be back down in this area at support. And I'd be looking for the 30-year down around 4.9, maybe 4.88. We'll wait and see what happens. VIX has broken out. Now here's the thing. We chart the VIX. I do chart the sequences. We have 5 waves up on the VIX, and then you have this 3-wave move down here with no divergence, which is good. So you have us 1, 2 here. So that's a nice sequence higher, and then you came up in 5. And now here, though, you don't have that. This is an unorthodox bottom. You know, we don't have divergence here, which is okay. That means that's a truncation. And as you can see here, you still have you have a little bit of divergence on that 4 hour. And of course, the daily, let's take a look at what the daily looks like here on this divergence. So what this tells me is the VIX could be playing a setup for people trying to play this breakout. So you got to be really careful with the VIX that it doesn't do this Friday rug pull or Monday or whatever, that it doesn't come back, because this pattern, I'll go ahead and label it here. You have this 1, 2, 3, 4, 5. So you have this 1, 2, right, up. And here you have this A, B, C. What if we're still in 2 and you get that, right? You got to be careful. This is not a flat pattern. You also have to be careful that what if it's 1, 2, and here it's a 1, and again, we're in another flat, and this is a flat, an A, B, C. It seems like the market is setting up for this type of drop and then a massive breakout of the VIX. So again, if you're going to time a short, I wouldn't do it. You know, you could try to breakout trade here and just like watch the VIX. If we fall back below 19, low 1920, then that's a false breakout. That's a huge danger sign. You want to see it continue. Again, ultimately get into 26.5. But if we get this reaction here, want to be careful with that. But you have to know what that is. If this happens, you got to know what has happened. It's being as a setup, and it could be even a higher degree setup. But we'll one thing at a time. Why could we think it's happening? Again, the 4 hour stochastics, you know, it's going up to the overbought area. It still has more room to go. The 45 minute is close to overbought. So these two, the 45 and 4 hour, need some reset, I think. The 15 minute, kind of the same thing. You had a reset here a little bit, but you are making a lower low. So I think you just have to be careful. The daily, though, as you can see, could pull back a little, but I do expect it to come up to overbought. The weekly has an obvious breakout. If this isn't a clear sign of the situation we're in, I mean, it doesn't get any better than that, right? I mean, this is key. Look what happened here. You see you had that breakout and then a massive breakdown, right? A breakout and then a breakdown to backtest this. I'm expecting that. And it wouldn't surprise me. And so if it happens, know what's happening. Don't be scared, because that's all the market's going to do. And that would be that rally. So we pull back and get that flat, and then and either it's a flat or even a higher degree. I think it would be something more like this. And then it's ready to roll. And then I would say if the VIX pulls back and gets here, and then the 10-year is back in here, and then I would say, and then 4 hour and 45 have reset, and tech is maybe back up at 364, maybe in this area, or hits this downtrend line again, then the market is ready for a massive meltdown. That's the setup. That's how I think it could go down. But again, I'm just speculating. I'm not a fortune teller. It may not happen that way, but these are things that I like to think about when I look at the market right now. So I do think that's what I'm seeing. I don't like to take long trades in any way. I like to be on the short side of the market. I don't like to buy the dip to try to anticipate any bounces. If you're doing that, like Tesla, you got destroyed. You'll lose all your money. News can drop at any moment. That could just blow you up, because the overall direction, the current, the river is flowing to the downside. So why fight against the current? Why swim against the current? Go with the current. You know, swim with the current. So if you make a mistake with your entry, it's forgiven. It's a little more forgiven, because if you're going to try to time this counter trend bounces, you could, like I said, you could really wake up unless you know exactly how much you're willing to lose and you have your risk management. All right, that's the market update. There's a lot there, but that's what needed to be said. Again, Apple, we haven't even started the fireworks yet. So earnings is November 2nd. Get ready for that. We'll see what happens. It doesn't look good. Looking over a cliff. Amazon, Wave 3 coming. Google warned about this top. Again, flat, could drop. Could be a lot of disappointment in Google's earnings. This is set up for that, guys. Look at this massive wedge. I mean, look at this wedge. Oh my goodness. It's set up, and it's got all the swings and everything. It's got the massive bearish divergences. I mean, it is just set up for a dump on earnings. I would not, I look at Google, I would be shocked if it moons. I would. But I'm not trading Google. I don't play it. I don't have any position in it. But I mean, it looks like, like I mentioned on Netflix on my last video, I said, hey, this was in a buy area. Look, it was in my buy area, and I was worried that it could still push lower and see and then reverse, but we didn't get that. It just popped, and now it's above. It flipped this support to resistance to support, which is good. So everyone's excited, but here's the big but. Look at those candles. You got rejected, a lower high. Again, big picture. If you can't get back over 409.20, whatever high this is, then this is just a connector wave for this first decline in a 1-2, and it's just going to retrace the whole move, which I wouldn't be surprised if it does. So this could be a great area to fade it below 408 if you've got a lot of, a lot of courage, and you manage your money right. Because look, this is massive top. Massive overhead supply. It jumped back into it. It wouldn't be surprised to see that get rejected back out. Tesla dropped, tanked, and again, had the short area. Look at that. Perfect short entry. Again, it just kind of trapped people. We said, don't worry. We needed to break 279 and never broke it. Stayed short and did, and now it's just a massive. Now you're just going to be printing money all the way down, and there's really no reason to cover that short. Because I do expect this low to break at 212, which should open us up to 180, and then we'll see where we're at. But I wouldn't be surprised to come all the way back to 128 on the historical line, and then you have to hope that this holds at 100. If that breaks, then you're looking at the end of the bubble. The bubble's popped, and it could go it could go a lot lower in a 3, and it probably bounce and then somewhere around 60, 50 bucks after a pretty big bounce, I'll have to say. But that's the key, 104. But I do think it's got more downside coming. Microsoft is it just can't make it. If Nvidia is tanking, it's just not gonna be able to do it. But I do have a short box here if it can make it up there on Nvidia. It's so bad, wants to break this pattern and go to 320. This is the first area where we can get a pretty good bounce in A, but that bounce will fail, probably on a back test of 405. AMD hit our short area exactly, and now it's erratic. Again, market participants are confused. They don't know what to do. This could be a 1, 2, 3, 4, and we could be playing 5 and then come all the way back up to 105. So I'm not even going to label this. This is a mess. As long as I would say you're below this 111, the right way to play this is short. But I do think it looks like you've got this massive support, horizontal support that's about to break. And when it does, that should break the trend line, and then that should cause the waterfall sell-off that we're looking for, the capitulation. And we're targeted 68. And this will be a shop-in list item. I will be going shop-in. I will be buying this back here, given the nature of this wave that we've seen. If we can get there, if we can get down here, and I think we will. It's just going to take some time. We'll see how it goes. So then that's all I'm going to say on my video. I'll do a live stream and we can ask questions. But like I said, the 45 and 4-hour stochastics just don't have enough energy, I think, to really crash the market. The daily, weekly, and monthly do have energy to keep us and get pretty low targets. So what I'd like to see is a reset of those stochastics, maybe with a little bit more downside like we're seeing here, and then some kind of relief rally either into earnings. And if we rally into earnings next week, tech earnings, and we're up here at this resistance, it's just setting you up for a collapse. You mean it's just setting you up for a back test and collapse. If we are down in this area into earnings, then actually earnings could be setting you up for a bounce, which would eventually fail for some other news event that we don't know about yet that will emerge. The wild card would be as if it just crashes, which is low likelihood, but it's possible with the VIX breakout. But we need to see a lot of fall through tomorrow, and these futures aren't going to do it. You need hundreds of points down in the futures. I'm not seeing that, so we'll wake up and we'll see what we got tomorrow and what we got to work with. That's all I've got, guys. Talk to you later.